Okay, welcome to my presentation today. My name is Stephen Xiao, and the topic of my presentation is Financial Analysis of Apple Computer. This presentation is prepared for the Financial and Managerial Accounting class, 2012 Calmat Summer Quarter, instructed by Professor Samuel Tong. It is well known that iPhone and iPad from my Apple computer are two hottest products now on the market, and everybody wants to have one or already have one. You may ask me, why do I pick Apple for my topic? I think the answer is easy. It may cost a lot to buy, but it costs nothing for me to take a look. On the next slide, we quickly go over the strategy of Apple. On the business strategy, Apple designing, manufacturing, and marketing the mobile communication and media devices, personal computers, and portable digital music players. Also sells a range of related software services, peripherals, networking solutions, and third-party digital contents and applications. For the product and the services, the company's product and services including the iPhone, iPad, Mac, iPod, Apple TVs, and portfolio of consumer and professional software applications. The iOS and Mac OS X operating systems, iCloud, and range of accessories. Service and support offering. It also sells and delivers the digital contents and applications through the iTunes Store, App Stores, iBook Stores, and Mac App Stores. Regarding operation decisions, Apple sells its product worldwide through the retail stores, online stores, direct sales force, and the third-party cellular network carriers, the wholesalers, retailers, and resellers. On the transactions during the year of by the end of 2011, Apple acquired Nortel Network Corporation's patent portfolios. In February of 2012, Apple acquired app search engine Calmat. Next, we're going to go over the financial statement. Next, we're going to go over the financial statement. The definition of a financial statement or financial report is a formal record of financial activities of a business. For a business enterprise, all the relevant financial information presented in a structured manner in a form easy to be understood are called financial statements. To ensure the uniformities and comparabilities between the financial statements prepared by different companies, a set of guidelines and rules are used. This set of guidelines have been commonly referred to as generally accepted accounting principles, which provide the basis in the preparation of a financial statement. Let's get some basic understanding about what is the statement of operation, or referred to as income statement. Sometimes people call it the profit and loss statement, or statement of operation indicates how the revenue transforms into the net income. Statement of operation displays the revenues recognized for a specific period, with the cost and expense charged against these revenues, including write-off and taxes. The purpose of the income statement is to show the manager and investors whether the company made or lost money during the period which is being reported. The important thing about the income statement is that it represents a period of time. This contrasts with the balance sheet, which represents a single moment in time. Next, we're trying to understand what is the base balance sheet. A balance sheet is also known as a statement of financial positions, which is the summary of a financial balance of a business organization. Standard company balance sheet has three parts: the assets, liability, and the ownership equities. In the balance sheet, assets, liability, and ownership equity are listed as a specific date, such as the end of its financial year. Balance sheet is often described as a snapshot of a company financial situation. For the assets on the balance sheet, the main categories are usually listed first and typically in order of liquidities. The assets are followed by liability. The difference between the assets and liability is known as equity. According to the accounting equation, equity must equal assets minus liability. Okay, let's take a look at the financial results for the fiscal year 2011. The company posted the annual revenue of $108 billion by the end of the fiscal year. That's 66% higher than the Apple total revenue from its 2010 fiscal year. The earning of $26 billion, Apple cumulated the earning and $27.6 per share. That's work out an 85% increase year over the last year's $14 billion. With all 4 quarters in fiscal year 2011 combined, Apple totally sold 72 million iPhones, nearly double last year's tally of 40 million. That's a little more impressive, considering the quarter's softening than expected iPhone sales number, which took a hit due to some holdings out for the Apple to release the new iPhone 4S. This is Apple's first full fiscal year selling the iPad. Consumers responded by snapping up 32 million units. About 2/3 of that number came within the last 6 months, which means it will continue its growth. There are 42.6 million iPods sold. iPods continue their sales decline this year, with the fourth quarter taking a worse hit. Even so, Apple noted that it still did better than the company was expecting to. Regarding the cash, there are $80 billion on Apple current cash pile, 2/3 of which is held overseas. The company already using some of its reinvest in its business. Such investment including acquisition of technology as Siri, which Apple bought last year and turned into the iPhone 4S feature. Apple made investments in intellectual property, include Apple's spending on the Nortel patents and spending on companies' retail stores. Now let's quickly go over the ratio and percentage analysis. The first one is the test of profitability. There are 7 items that we can use for test. The first one is return on equity. Second one is return on assets. Third one is the financial leverage, which is the ROE minus ROA. And the fourth one is the most important, the EPS. Fifth one is quality of the income. 6 is profit margin, and 7 is the fixed assets turnover ratios. Let's do some quick computing on the profitability test. First, let's try to find out what is the return on equity, which is the ROE. For 2011, if you take a look at the net income on the financial statement, that's about $26 billion, and average stockholders' equity is the 2 years average, and then it's about $62 billion. So the ROE is the 26 divided by 62 is about 42%, which means that it offers a return of $42 on every $100 investment. The next one is a return on assets, which if we take a look at net income again, that's $26 billion, but the interest expenses is $0, which they don't own bank or any institution money. So the average total assets again is about $96 billion, and then when we do a calculation on the ratio, it's about 27%. This offers a return of $27 for every $100 investment. And next to this, we're talking about the financial leverage. And normally, the financial leverage is positive, but for Apple, the financial leverage is negative. And the negative means that there is no leverage being used. If there is a positive financial leverage, which means that company borrow the money from bank and reinvest on something, get better return than the interest rate they're paying to the bank. On the next slide, we continue computing of the probabilities. The most important one is the EPS, which is the earning per share. For 2010 and 2011, the average net income is about $20 billion, and outstanding common shares is about 2 billion shares. So the ratio for the earning per share will be $7.30. Next to this, let's take a look at quality of income. The net income is about $26 billion again. The cash flow for the operating activity is about $37 billion. And the quality of income is about 1.45, which is a high quality with income. The number of indicates of $1 income support about $1.45 cash flow. It is a very healthy ratio. Next to this, we're talking about the profit margin. Again, the net income is $26 billion. The net sales revenue is about $108 billion. So the PM, which is the profit margin, is about 24%, which indicated $1 per sale generated 20 cents of the profit. The profit margin is positive and is healthy. Next, we're going to check the fixed assets turnover ratio. It is the ratio between the net sales revenues and the average net fixed assets. We check on the financial statement and find the net sales revenue is $108 billion. Average net fixed assets to add to 2010 and 2011 and divided by 2 is about $6 billion. So the fixed assets turnover ratio is $108 billion divided by 6